And let's talk about down payment assistance, right? Guys, who in this live wants to get into a house completely free? And I really mean it, completely free initially in the renter.
With 0% down. And Brian, no, we are in Southern California. We're currently in San Fernando Valley here at our office in Studio City. But we work all of Southern California, guys. So anywhere from Modesto all the way to San Diego, Hesperia, all around.
Yep.
Did you ask something, Dean? Sorry,
Yeah, no, I was saying who wants to
Hi,
get into a
Mommy
home for
Nico.
completely free?
How are you guys doing today? Welcome to our live. We are Southern California Realtors based out in Los Angeles. We're right here in San Fernando Valley. We have our lender partner on the line, Dean.
Hey, guys.
We're answering all your questions about mortgages, home buying, home selling. We want to announce that we're going to have a home buyer seminar this month on the 25th, where we will be raffling away a free home inspection, free appraisal, raffling away a TV. We're going to have free food and drinks. We're going to be answering all your questions that you have about real estate. So if you have any questions, or maybe you know somebody who's interested in buying a property and they don't know where to start, this would be a great resource for them, and it's 100% free.
Yep, 100% free, guys. July 25th. The link to this event is going to be, or is already in my bio. B Marcoyote 818 North Hollywood. Are you in North Hollywood, Marco?
Oh,
We're
nice.
close by.
Local.
Yeah, this DPA would be for you, Marco.
Oh, yeah. Continue talking about it. Sorry, Dean.
Very good. So, guys, we have this program, right? It's a forgivable loan down payment assistance. What that means is we're going to finance you the 3.5%, 3% conventional loan, whatever the down payment is, okay? Now, we're going to finance the minimum, and we're going to literally slide this money down the table at closing and say, keep it. We don't want it, okay? Completely free. Now, this does come with a higher interest rate. We're not talking 8 or 9s. We're talking more so 6 or 7s, okay? Depending on what your credit score structure is, that will depict what your interest rate will be. For all my rate-driven people, you have to ask yourself this question: Is time more important, or is money more important? Okay. And the reason I ask that is because if time is more important, the basic answer, I would say the most obvious answer is
Hi, everyone who's joining.
right?
We are just talking a little bit about mortgages, mortgage rates, down payment assistance. So if you guys have any questions for us on that, just go ahead and put in the comments below.
Okay, so sorry.
Yeah. No, but I was saying, but if you guys are, initially want to save your money, the down payment side is the way to go, okay? Especially when it's forgiven.
What are you able to get people right now with down payment assistance? Can you give us an example of somebody who's gotten 20, 30, 40, $50,000? Like, what is it looking like right now? Is it a case-by-case scenario? Can you tell us a little bit about it, just so the people watching can get an idea of what they might possibly be able to qualify for if they are interested in the DPA?
Yeah, good question. So I would say we don't go off of a number system, right? So we don't go off that metric. We don't go off of like 40, 50,000. It's really just the minimum of that purchase price. So if we have $1 million house, they're going to finance you 35,000 of that.
Okay, so it's like a certain percentage then.
Yeah, exactly. Then you're going to go down. So they're just going to cover the minimum.
Okay, and then for the program that you were just talking about, we have a question from Wendy. To Airbnb a property, can I go FHA route, or does it have to be conventional?
So here's the thing, right? With loans, let me explain this. So when you're going an Airbnb route, what I'd like to say, and I don't want to say anything wrong here, but if the bank doesn't need to know certain things, do not tell them, okay? Like that's just the most obvious thing. So it really comes down to, we can get you the loan. Like, whoa, that's a 100% definitive answer. We'll get you that loan. But now you're going to have some conflicts with the city, right? Because there's going to be regulations in every city. I know in Burbank, they don't allow Airbnb short terms. They only allow long-term rentals, okay? So you got to look into the cities, okay? You got to look at the regulations upon the cities. With the loan, don't worry about that. We'll get you that loan, okay? But after that, it's all up to you, right? All liability falls upon you, because you have to do your due diligence on the city's regulations when it comes to Airbnb, okay? There's also one more thing to add to this. There's also an Airbnb loan, okay? I like to call it Airbnb loan. That's not what it's labeled as. But essentially, it's a short-term DSCR in Airbnb. And we use something called an Airbnb cert, okay? So we don't get an appraisal. We just go online and we look at like It's like a moderator. It generates a projection of like the Airbnb rentals in that area, and we'll use that instead of an appraisal.
Oh, I didn't know that.
Nice.
Yeah.
I did not know that. So Wendy, are you interested are you interested in purchasing a home to Airbnb? I'm gonna follow you. Okay, and then user 24 is asking, is escrow required due to it being basically an interest-free loan to the bank? Yes, escrow is required if you are going to be completing a transaction with, real estate agents. Escrow is a third party that holds basically the money, your earnest money deposit. They're the third party there. So it's the third party between the seller's agents and the buyer's agents. Nice. Okay.
I have seen in one case before where like it was an intra-family transfer where there was no escrow. It was more so like family, but that's like 1 percentile. So guys, if you want to do this professionally and you want to make sure your money is saved, you got to go through an escrow. Okay, like that's just, it's mandatory. It's 100% mandatory.
It's the neutral third party, guys. They're the ones that handle all the paperwork and receive the money, and they're just the neutral side. Wendy says, thank you for the information. Looking into it in the future. Of course, Wendy. And if you are in Southern California, we are going to be having a home buyer seminar here in our office in Studio City from 2 to 5 p.m. July 25th. We're going to be talking about the home buying process, and we're going to have different vendors there. Dean's going to be there. My business partner Eva is going to be there, giving you guys information. So the tickets to the event are in my bio if you are interested, and hopefully we see you there, Wendy, or we talk soon.
Yeah, guys, we're selling out.
Yep.
Yes.
We are only 35 tickets, guys, so they're selling out quick. Yep. All right, guys. Well, welcome to our live. To the people that are just joining, welcome. My name is Nicole Eugenio, and I have Eva Cannon, my business partner, here as well.
How are you guys doing today?
And Dean, the lender's on here too to answer any questions that you guys might have. Dean was just right now talking about down payment assistance programs and how he can get you into your first home with zero down, so no money down. This program, Dean, do you want to explain it again? Okay.
Yeah, of course. So guys, down payment assistance, right? What that means is, who wants a home for free? That's what the bank's asking you guys, right? If you want a home for free, listen up. We have this forgivable, exceptional program, okay, where DPA is given, literally sliding down the money to you in your pocket, and we don't want it back. This helps you initially pass that first step where you can go into home ownership, okay? When I mention forgivable, in the events that you trigger a refinance or sell, we do not want that money. That's money given to you in your pocket. The only con or the only caveat within this product is you will be getting a higher rate. Okay, we're not talking 8 or 9s, we're talking 6 or 7s. Okay, depending on the product that you choose. So if it's FHA, we'll go 3.5%. We'll follow those specific guidelines. You're going to get like a 6%. Now, if you're going conventional, we're going to follow those specific guidelines, and you're going towards like the 7 percentile. Okay.
Now, can people who are going to use non-qualified mortgages, can they also get this? Like, because sometimes they have a higher down payment.
You're saying, can they
if they have a 10% down payment? You know how sometimes with the non-QM, they're a little bit higher?
Oh, you're saying interest rate?
No, the down payment. Like, does it go up to that?
No, there's no DPAs for non-QMs.
Okay.
Yeah, absolutely no. Non-QM is like a made-up space for people that can't get approved the traditional route.
So it's just FHA and conventional that this would apply to. Okay.
With non-QM, we assume that you guys, or when I say you guys, it's the chat. We assume that you guys already have some money, like reserves, so that you guys can put that down, because it's usually self-employed borrowers that can never get approved the traditional route.
Okay, cool. And then another question that I had, what are the requirements? Because everybody wants free money, but what are the requirements?
There we go. So look, this is the first requirement, credit score. I always emphasize, guys, credit score will steer you the correct way in life through anything, okay? I believe, and this is an off-topic thing, I believe this world would be so much better if we just had a credit score on our forehead that everyone can see. right? Then you can say, hey, I want to work with him. He has a good credit score.
He
He's probably
wants it to be
responsible.
like Black
So
Mirror where we have our social credit score showing.
They're gonna
No,
judge you
thank
right
you.
up front.
it'll save a lot, right? So guys, just don't do it because you want a loan, right? Just do it for the better. You're gonna get better terms, better financing. Shoot, you might have people respecting you even more, right? I mean, when I hear someone that has an 800 credit score, I'm like, wow, I give them more of like a, an honor. I'm like, wow, how did you get there? You're making your payments on time. You haven't missed a beat, okay? So first things first, let's digress.
All
You
right.
need at least a 640 credit score with this DPA promotion, okay?
Okay.
So 640 credit score, number one. Second, there is going to be no income limits, which means we go by something called an AMI. Okay, an AMI basically states that in a specific city, they take basically a poll on in the entire all the people living in that city, and they say, hey, how much do you make? What's the median? Okay, if you pass that median, that's fine. We'll give you the DPA. If you're below it, don't worry. We still got you the DPA. Also, you do not need to be a first-time home buyer. That is the best topic that I can bring out to this because a lot of people think first-time home buyers correlates to down payment assistance. That's not the case here. You can get down payment assistance whether you're a first time, second time. I would say third time we got to relax a bit, right? We got to go into reality. But you guys can have a second home with a DPA.
Okay.
So it doesn't have to be your first time purchasing a home, guys. Your credit score has to be a minimum of 640. And then you have to meet the income requirements. So you can't go above average, right? For that
Oh,
city.
no, Nicole, you can't. You
Oh,
can't.
you
There's no
can?
income limits.
Oh, no income
Yeah.
limits.
Yeah, no income limits.
Oh, okay.
Unusual DPAs though, like I would say the majority of DPAs, they do require you to be below those income limits. But with this specific forgivable DPA, you don't need to have high expectations, or you don't need to go past that.
Nice.
Or you can, but it doesn't matter.
Okay. User 24 set is asking, should I wait till the upcoming crash before I buy? Everybody's always waiting for the crash. Oh, everyone is waiting for the crash. I don't know.
You'll be waiting with everyone else so that when it does happen, you can be fighting against 40 other people for one house. So that will be a lot of fun, right?
Guys, you just have to learn how to work the market. You have to work with the current market. Again, we were just talking about this yesterday on live. If you guys have stable income, if you guys are projected to, make the same amount around or more, maybe, for the next year, 2 years, then,
it's probably
let's
worth
hop on a
buying a
call.
home right now.
Yeah.
Yep.
Exactly.
Yes. And buy the home before you buy the car, okay, guys? Like, we have a lot of people who come to us and they will have really high car payments, and it just messes up the debt to income ratio, so they're not able to qualify for as much as they would want on a home. But if they had not got that car, and we're not in the $300 or $400 car payment phase of life anymore. Car payments are looking like 8, 9. We've seen them up to $1,200 a month. So guys, that is extremely high for a car payment, and when you're paying that much monthly, it's taking away from what you'd be able to afford in a home.
Yeah.
But if you are about a year away from your car being paid off, Dean can omit that, and it basically will help you in the long run with your affordability and how much you can purchase.
Yep, 10 months
10
to
months.
be exact. 10 months. So if you guys have 10 months or less of your car payments, then Dean can go ahead and drop off that debt. He won't even count it.
Exactly. And guys, look, another thing too I want to touch on. When there is a lease, right? When there's a lease that's happening, you have less. How can I explain this? When you get a car note, right? When you're able to purchase the car, but you're using a loan, we have a lot of ways that we can maneuver and get you approved. Like, we can omit it. We can hire up a loan amount from another property and pay that off. We'll go into that into detail later. But when you have a car lease, it's going to be a lot harder because the bank assumes, hey, when you give this car back, are you just going to walk to work? Are you going to just walk to school? No, you're going to probably get a new car, right? So it means a lot more if you guys actually buy the car. And this is not financial advice to state, hey, go buy a car. But just so you guys understand, the bank isn't dumb. They were probably born last night, or at night, but not last night. So you want to make sure that it's believable. You want to make sure that we file everything accordingly. Okay, so we can't just omit a car lease when it has like, let's say, 13 months, because then the bank's gonna question, what are you gonna do? Are you gonna use your mom's car? Like,
So a car lease is fine as long as it's like not on the verge of ending within the next year. So like if it's
Yeah.
like a 2 or 3 year car lease, that's fine.
So no. So if you have like 10 months, let's just say 10 months left on a car lease, yeah, we can basically omit it, but the bank is gonna question again, like, okay, after the 10 months is done, like, are you gonna get a new lease? Like, you know what I mean? So we would have to explain it, but it has to make sense. It has to absolutely make sense. If you have 10 months or less on a note, meaning you got a loan to buy the car, we'll exclude that right off the top.
User 24 said, yo por eso ando a patamóvil. He's saying that that's why he doesn't have a car. He's on feet mobile.
There you go.
Patamóvil.
Me in high school.
Patamóvil. I used to have a scooter in
Bus
college.
submission.
Yeah, you gotta do what you gotta do to save some money.
Guys. There's this funny story. I had a borrower. He basically had like 12 months left on his car lease, and we had to tell the bank, like, hey, he's gonna get Ubers back to work, and it crossed, like it got done, but it took a lot of like explanations. Yeah, it was just bad. It was really bad, but I mean, like I said, we can make anything happen. You just have to explain.
Dean is Mr. Make It Happen, so yeah.
He is. So if you're working with bad credit, no income, haven't done your taxes in 2 years, bankruptcies, Dean has been able to help all those people that we bring to him with all different types of scenarios. So contact him. His information is right here. If you're coming from TikTok, if you're on YouTube, please do go to my Instagram, same name. I have Dean on there some of our stuff, so you can have his information.
Yeah.
If you are watching from Instagram, just go to his page. So,
and guys, I also want to mention too, Eva, guys, don't hit me up directly, because I'm going to hit you with those high prices. You got to go through these two ladies so that I know, hey, I need to give you guys exceptional pricing, the best interest rates out there.
Yep, Dina's doing us a favor. We're a family right here, so we take care of each other.
We are.
Okay, user 24 is saying, le voy a preguntar a Walmart si me deja poner una carpa. A la verga. I don't know. Pues pregúntale a Walmart, a ver qué dice. He's saying that he's going to ask Walmart for some help.
Walmart?
For some work.
Like extra hours?
Yeah.
Oh, Lord. Well, a job is a job.
Nice. Okay, but that's really good, Dean. I didn't know. Are those down DPA programs new?
Yeah, so this one actually came out, I would say, like 3 months ago. So this DPA, it's I don't know. I felt like it was so powerful, because a lot of DPAs, they require a lot of like, first time home buyers. They require you to not make a big amount every year. There's just a lot of things that was just holding everyone down from getting the DPAs. I don't like to talk about grants, like from, like the counties and stuff, because they recall for a payment back. And sometimes it's just like, okay, why would I do that, right? If I have the 20,000, why would I just borrow it for someone else and then get hit with that at the end? Like, it doesn't make all the sense. So with this program, it checks off all buy boxes.
Okay, so you don't pay this back.
Yeah, this is forgivable. You do not pay it back. This is literally yours. In 6 months, if your house appreciates by, let's say, 30-40%, that 30,000 that they gave you, put that in your pocket. Go to Vegas.
What? You don't have to pay it back? That's
nice.
crazy. That's
Good
actually really good.
Yeah,
Dean,
it's forgivable.
what? Since when did you have this? I don't even know.
I've had it for 2 months, but I never really talked about it because the income limits, that thing just changed like last month. So there was like no income limits. That was just, I don't know. It was so cool. It was so cool.
What is it now? The income limit?
There is no income limit.
Oh, for this one that he's talking about right now?
Yeah.
No income limit. Also available for, you don't have to be a first-time home buyer either. 640 credit score, which is, it's not too bad. I don't know. I have really good credit.
640 is average.
Yeah.
It's pretty average.
But if you guys are wanting some help, if you guys need some help boosting up your credit, we do have a credit specialist that we connect our clients to.
Yes, and they have a rapid rescore. So if you think that you have to wait a month to get a rescore after you've paid all the stuff, no, we can have it as back with a boosted score as high and as soon as 3 business days.
Yeah.
Mm-hmm. So there's so many different avenues that we can take when it comes to every situation. Like we said, we have clients who come to us who might not have the best credit, but we hand them over to the credit repair specialist. They're able to take care of them. Then they come back. Dean's able to get them pre-approved, and we're able to go shopping. So we all work, like Nicole said, as one happy family. So come to us with any scenarios that you have, any needs, and we're gonna try to find a way to make it work for you.
Yeah, guys, don't be scared to give us a call or text us. Like, we are open to talking to anyone, even if you're just curious about buying 2 years, 3 years in advance. Like, let's prepare you now. Let's start with the plan now.
Yep.
We're not only talking to people who are ready to buy this summer. We're talking to people who are planning in the future. This takes planning, guys. Buying a house is a big investment. It's a big decision, and we understand that. We're not just trying to sell you.
Yes.
It's
And
a
even if
process.
it's not you, it might be your coworker, your cousin, your brother, your sister. We've actually helped someone whose sister found us and introduced us to their brother. So you never know who you might be able to help just by sharing this live or letting them know, like, hey, I came across these realtors. They have some really useful information. Maybe you should check into them.
Mm-hmm.
Yeah. And guys, an incentive, right? We're not opposed to like sharing a referral fee or anything like that too. Like if that's what it takes, like we just want to help as many people and show our names to a bunch of people, right? Like it's just repetition at this point. So there's a lot for everyone, right? And we are not opposed to the referral fees if that's what you guys want to be incentivized from.
Yes.
Yep.
And just to reiterate, we are having a home buyer seminar this month on the 25th, right here in Studio City in Los Angeles. It's going to be from 2 p.m. to 5 p.m. Nicole, I will be there. Dean will be there. We're going to have a home inspection person there, a title rep, home warranty rep. Everyone's going to come and talk to you everything about home buying so that you can go into your next purchase with all the information that you need, feeling sound and secure in your decision making.
Free information, guys. This event is going to be completely
100% free.
The link to the tickets is in my bio, so get your tickets. We only have 35 seats, and I'm pretty sure we have less now, so get your tickets, guys.
Ortiz, come on through. Come see us in Studio City on the 25th. Okay, we'll be looking for you guys. I know that one person who watches our live, what's his name, King Hernandez. I think he's coming. Okay, so we got people who are already coming, who come straight from TikTok, who watch us. So it'll be real fun, guys. Come meet us in person. We don't bite.
We're very nice.
We're very nice people. I promise.
Yes, but welcome to our live, guys. If you guys are new, we are real estate agents. My name is Nicole Eugenio, and this is my business partner, Eva Cannon.
Hello.
And we have Dean, the lender, on here too, answering your questions. We were just going over some DPA programs, down payment assistance programs. And Dean was basically talking to us about how you can get into your own home with zero down, guys.
Zero down.
Zero.
And usually, this is something that you only see with veterans. Like, you guys have a chance to get into a home, nothing down. We work with tough negotiators like Nicole and I. We usually are able to get most, if not all, of our clients' closing costs covered. So we've seen people get in with literally nothing.
Nothing, guys. Nothing. If we are able to negotiate all of your closing costs and Dean is able to get you that down payment assistance, what's stopping you? We're making it easy.
Yes.
But yes, guys.
If you guys have any questions for us, though, and if you have anything maybe you'd want us to go over during the seminar, let us know. Like, we are always open to hearing what you guys think, your feedback, all the good things. So if you guys have any other questions, drop them in the comments.
Let us know, guys. T-Man, thank you for the follow. Thank you. Okay. What should we talk about? Since you guys aren't asking us questions, ask us some questions, guys. We like to hop on these lives and just talk to you about whatever you're interested in. We go over the same things, the home buying process, and we can do it again, but we just want to reach out and see what you guys are in need of. What questions do you have?
let's actually talk about the program that Dean was talking about yesterday, I believe, when he was talking about buying the home with another home, like how they'll omit the.
Oh yes. We went over that right now. So like here, this is how it works, guys. With the non-QM space, non-qualified mortgage space, there was this breaking news that happened yesterday, literally on the live when I just got the memo. But it states if you guys already own a house and you guys are residing in it as a primary residence, and you guys are looking to, what we can do is we would ask the seller, right? Or I would state. I would have the person write, I am selling this within 90 days, and we would omit that or exclude that from the DTI. Sorry, guys, I got distracted. So yeah, we can completely omit it if you guys write a statement, okay, saying I intend to sell this house within 90 days, and then we'll completely exclude that. Now, we did have a buyer, and I wish this program came out 2 or 3 months ago. They were kind of stuck at like $850,000 of a purchase price, so they were only able to look at home prices from $850,000 or lower. And the whole misconception here is they had that property still behind their back, right? It was eating them literally from the inside, and they were able to afford up to like 1.2, 1.3, but they couldn't because they had that liability stamp. With this new product coming out, you can fully exclude it just by a simple letter. And I don't know how much easier it needs to get than that.
Okay.
Cool.
So if you guys own a home and you're looking to make your next purchase, contact us because we can help you with that, because typically that will affect your purchase power, having another mortgage. So hit us up. We can talk to Dean. Let's come up with a plan on how we can sell your home, get you into the next one, and it doesn't affect your purchase power.
Yes.
Or even if you want to contact us and we could tell you, hey, would it be more beneficial to rent out your property and keep it? Maybe use that income to also boost your purchase power on the next one. So let's have a conversation. Let's come up with a strategy and figure out, hey, do you need to sell? Can you keep it? You know, it might work out for you best to just become a landlord, depending on if your rent could cover the mortgage plus have a little bit left over to keep just in case you need to make any repairs or maintenance or any of that type of stuff.
Exactly. Guys, we're going to be taking calls after we end this live. My
Where
phone number
is
is
it?
up here.
Our homebuyer seminar is going to be here in Los Angeles in Studio City, July 25th from 2 p.m. to 5 p.m. You can go to my TikTok or Instagram. The link is in our bio to get the tickets. So please come join us. We would love to have everyone there so we can educate the community.
Yes, Teresa, I see you on the live. Welcome, Teresa. Teresa, I met you off of TikTok a couple months ago. So we are inviting you, because I know that you are also a first-time home buyer. We're inviting you to our home buyer seminar that we're going to be having here in Studio City at our office. It's going to be July 25th. I'm actually going to reach out to you directly, but our link for the event is going to be in my bio, so get your tickets. We're going to be going over the whole process, the whole home buying process.
Yes. And you don't even have to be a first-time home buyer to come to this event. If you already own a home and maybe you're thinking about buying in this market, this is the event for you. Things have changed since 20 or 10 years ago when you maybe bought your home. Hello.
Hi, Trade. Welcome. Trade is always on here supporting. We appreciate you, Trade.
We appreciate you. Do you guys have any other questions for us? If not, we could just do a quick going over Home Buyer 101 and then we gotta go because Nicole has stuff to do.
Yep, we can do it quickly though, since nobody's asking us questions. Let's show off our new room.
Oh yeah, what do you guys think of the new space?
Isn't it cute, guys?
Is it giving what it needs to give?
It's giving girl boss. And we did this alone.
What do you think, Dean?
I think it's great. I think it fits you guys.
Yeah, fits our personality.
We have the TV that Dean so graciously bought us in the background that we will be presenting off of soon. We're working on a PowerPoint presentation, so no more whiteboard. We're upgrading.
Yes, we should do that, and then we should put the leaves on here.
Yes, that's exactly what I was thinking too.
So
cool.
maybe we can stand it on this stool.
You think so?
Let me see. We'll just hold it.
Okay. All right.
Would it work? I think we just need. Okay, let me
Flip the
change
mirror.
this.
We're gonna have to change this.
Let me flip the camera.
Hold on.
Oh no, that's not it. Hold
This
on.
looks like
Mirror your video. Okay, there we go. So you guys can see the board clearly.
okay.
Oh. This way. All right, guys, we're gonna be going over the home buying process with you guys a little quick. Oh, that's perfect. That's actually perfect. This looks like a school. This looks like a classroom, guys.
Yeah,
We're here to teach.
Professional.
Professional.
Yes.
I love it.
Let's do it.
Let me get turning on the light a little bit. It's a little dark. So you can see the board clearly, guys. We're gonna be teaching you guys a lesson. A home buying a home buying 101, sorry.
Your live was restricted.
Oh.
Body exposure and sexual behaviors. What the
What was
heck?
I doing?
What the heck?
That's
What happened?
crazy. The TikTok was banned from.
It
some
was
people posting.
basically saying that she was. That
I was
we were-
getting naked or something.
Oh, this is mine.
Yeah, it's yours.
What the heck? It was basically saying that we were like showing nudity and sexual references. Oh shoot.
What is the forecast of interest? Oh,
Oh,
we have
Dean, that's a
for
question for
Trey.
you.
Go. So we're at a whopping 6.62, I think. But working with us, I'll get you something a lot lower than that.
Yep, a lot lower, guys.
Some good pricing improvements.
All right, let's see if we can somehow.
Okay,
I
here,
forgot my
maybe put
tripod,
this
guys.
behind it. So it can-
Oh yeah. Put it down.
Does it work?
I forgot my tripod.
I
at
have very
home.
little faith in that.
Yeah.
Maybe just put it on it, like directly in front of it. Oh, perfect.
Hopefully then it'll work.
Can you see it? Can you
Can
see
you
it?
guys- Should I take off the text, like my board?
Yeah.
Okay, let me see.
Alrighty.
Let me take off the board.
Reset the live. Oh, damn.
It's asking you to reset?
I can't. Big Flash, I put a promotion on this.
Sorry.
I can't.
Give me 1 second, guys. I'm trying to take off this board so you guys can see it.
But if you guys have any questions, please do let us know, okay? Because...
All right, we're back, guys. Can you guys see the board clearly?
Oh my god. How do you remove a board?
You click on the little pencil.
Oh, okay.
All right, cool.
Okay,
User
cool.
866, hi Memo.
Nice. So
Cool.
you guys can see us and hear us and all of the good things.
I think they're only gonna be able to see the board in TikTok, but that's okay.
Oh.
That is okay.
Okay.
I'll sit down.
Cool.
Oh, I forgot my. I'm bringing my tripod tomorrow because this is a mess.
Okay. Do we have any questions on here? Oh, somebody did have a question. Hold on. If you ask a question, you should leave a reply in the language of the country. What? No, we speak English and Spanish. That's it, and that's
Yep.
all. Don't ask us to do any more.
También hablo español para la gente que me que me ve en los en vivos. Aquí estoy para ayudarles. Vamos a explicar el proceso de comprar una casa ahorita, okay? We're gonna go over the home buying process, guys.
Yes. And Nicole will be translating because my Espanol is un poco.
It's limited, but it's getting there, guys.
It's getting there. I can tell you the day and time. That's it.
Okay, perfect.
Cool. So, welcome to Home Buying 101 with your favorite realtors and your favorite lender, Dean. This is Nicole. My name is Eva. Together we are the A-Team.
Yep. Wendy 714, thank you. We appreciate you for sending the live. Guys, send this live to anybody who's interested in learning about this process. We can go more in depth if you guys ask us some more questions. So don't be scared to ask us questions,
Yes.
okay?
Tell a kin, tell a friend, tell that heifer you hate about this live because we're about to teach y'all how to buy a home.
Yeah.
So listen up, sit down, and ask questions. Okay, there's no such thing as a stupid question in this live. Now, step 1 is getting pre-approved by a lender. Now, it doesn't have to be our lender, but we will say he is one of the best. So if you want to have a seamless, easy process where you don't have to think too much, he is the guy to call. We will have his information up in a little bit because we took our board down so you guys can see this, but let's just get started. So we're going to go over the different types of loan products. There's 2 different types. There's qualified and non-qualified mortgages. We're going to break down the qualified mortgages. Nicole, do you want to start off?
Okay, so the first one that we have here, this is a qualified mortgage, guys. This is FHA. It is a government-backed loan, okay? With an FHA, it does require a minimum credit score of 580, and you need to put at least 3.5% down, okay? 3.5% down. For this FHA loan, guys, you will be paying private mortgage insurance, the
For
PMI.
the life of the loan. So no matter how much you pay into this, you will have to pay that extra $200-300 just so that the government has their security, just in case, God forbid, you guys ever default. That's what they use to protect themselves.
Mm-hmm.
Next, we have conventional loans. These are bank-backed loans, and the pros of this are if you're buying a house under $500,000, you can put down as little as 3%, even lower than the FHA baseline. The other pros of this are that the PMI can be removed once you've reached 20% equity in your home, and you can put down as little as 5% on a home over $500,000. Typically, people think if you're using conventional that you have to put down 20%. False. You can put down as little as 5%. The cons of this is that you're going to need a slightly higher credit score than with the FHA, but still 600. That's pretty average. That's a pretty average credit score. Now, the debt to income requirements are a little bit stricter with conventional. As Dean was saying, it might be a little bit tough for you if you have a high car payment or you have high debt that you pay every month. So that's just something that you need to keep in mind if you're thinking about this over the FHA, because the FHA might be a little bit easier to get into, right, Dean?
Yeah.
Okay.
FHA is basically they want you to get in a home, and this is think about it, guys. They allow you to use 56.99% of your total monthly income towards a mortgage payment, right? They allow this because they assume that a first-time home buyer probably has a bunch of debt. They do allow 580 credit scores, so you can be that ugly profile, right? But you could still qualify for a house.
Okay.
Okay, Dean should go over the VA.
Yes.
Yeah.
VA loans.
Let's do it. So we got VA loans, guys. VAs, we're so happy and so grateful that we have you guys. We appreciate your service, the whole 10 yards, right? Now, let's talk about the entitlement and the benefits that you surely get when you go into active war or whatever the case. So you get 0% down. You do have something called a COE, a certification of eligibility. That is your entitlement document. Okay, that will explicitly tell us how much of entitlement you guys have for the down payment. Now, we do also need your DD-214, which is a discharge note. Okay, it specifies when you have been discharged. Or I should take that back. When you have been in active duty, and then when you have been discharged, okay? That's just a certification showing that you've been discharged. Now, if you are still in active duty, that's totally fine, right? We would just want to see your documentation that, for your BAH and your BAS. I believe it's called it's like a pay stub, but I forgot the name for it, okay? So we need that if you're in active duty. We also would need your disability letter if you want to be fully exempt from that funding fee. Now, you do not need to be disabled, but it will definitely help you, right? It'll save you a lot more money. You guys want to talk the pros and cons? Let's go over the cons.
Okay.
Cons, there's going to be specific properties that, you probably cannot get funded through a VA. So that's like a con, but, what are the chances of that happening? It's probably like a 10% chance that there's going to be a property that you guys can't use a VA loan with. The pros, again, down payment assistance, not even down payment assistance, 0%
down.
Yeah.
Lower interest rates.
Oh, and no mortgage insurance as well.
Yeah, no
These
more
do not have mortgage insurance. Okay?
Flexible credit requirements.
Yes. So we go off of residual income. Okay, it's the same thing. It's the same exact thing as if we're qualifying you. I've seen people. I've seen this one person actually. It's a real story. He had 60% of a debt to income ratio, and it passed the DU. It passed desktop underwriter. I don't know how, but he had enough residual income, and he was able to get it approved.
Wow.
Yeah.
Okay. So if you are a veteran or you know a veteran who might be looking for a home, this could be the best option for them. We've actually had people who are veterans who decide that a conventional loan is the best route for them to go. So you never know. You never know what loan might be the right product for you. That's why it's important to hop on a call with us so we can come up with the best plan that fits your situation the best.
Yep.
Dean, can you put my phone number in the chat?
Yeah, of course. What's your phone number?
It's 747 977 1747.
Lots of sevens.
Yeah, a lot of sevens.
Yep, I'm a lucky person.
That's a good luck number.
I'm just kidding.
All right, we're gonna go over the non-qualified mortgages now. Now you might think like, if it's not qualified, why is this good? Dean, do you care to explain that a little bit?
Yeah, of course. Non-qualified mortgage, guys, it is basically stating I cannot get qualified the traditional route. So in other words, we sector this into like a non-qualified position, okay? And you got to think about it like this. It's a non-QM, right? And then there's an umbrella, and it specifies the different products, the different matrices that we have. So the first one everyone probably knows of is the bank statement program. We essentially take your 12-month picture, right? We look at all your deposits, we add them up, we throw in an expense factor, and this is decided on the industry you're in. If you're a reseller, we have to hit you with 70%. If you are a retailer, we got to hit you with like 60%. If you are, let's say, a barber, a self-employed, you do electrical work or whatever the case may be, you're a roofer, we will include a 50% expense factor. And then we will divide that by 12. That is your monthly income. And I've seen it in most cases. Like, I've seen people at a 10% debt to income ratio. So you pass that by like a lot. You can qualify for this mortgage 5 times. Think about it like that. Okay. Now that's bank statement. With a profit and loss statement, this is a powerful resource to all my self-employed borrowers, and I actually like it better than the bank statement. And let me tell you why. You do get better pricing with a profit and loss with the specific bank I work with, okay? We just need a licensed CPA, a licensed EA, or a licensed CTEC. We do not allow PTINs, okay? PTINs are pretty much, they're able to access your tax returns and process for you, like prepare them, but we don't they don't have like a definitive license, okay? So we need an EA, CTEC, or a CPA. And it doesn't need to be the person that filed your tax returns. It can be a random CPA, but we want them to overlook all of your files, okay? And we'll take their word for it. So again, guys, I actually star the profit and loss, like put a star right next to it, because that is the best non-qualified mortgage out of all of them. Now we do have the DSCR program, okay? DSCR program is a debt servicing coverage ratio, okay? It's right below the profit and loss loans on the board. So with this loan, we do not look at your income profile. What we do look at is going to be your credit score, but we target our attention on the cash flow of the property, okay? So if the property cash flows about $4,000 and your mortgage so happens to be $4,000, that's a 1-to-1 ratio. We'll fund it, okay? Now, if you're into like this, this category of borrowers that are like, damn, I can't cash flow this property, right? Like with this interest rate, with these monthly payments, it looks like I'll be making $3,000 on this property, but I'm going to be paying $4,000 a month. It's okay, guys. We have a no ratio DSCR, okay? What that means is you do not need to cash flow on this. You can actually be negative. So it's a true no ratio DSCR. It does come in with a higher rate, okay, by the way. Next, we have is the ITIN, okay? ITIN loans. We have them as low as 3.5% down, okay? That's not to say that we want you to put 3.5% down. If you have the money, again, if you guys have the money for the down payment, you should put that down. It's an investment. It's an investment upon your appreciation, and that leads to your equity, okay? So if you have the money, put it down. That's 15 to 20% on ITINs. I can get an exception on 11% down as well. Okay, so if you guys are interested, let's talk. Now, if you are the 30 percentile, right, of the ITINs that are like, hey, you know what, I want to put 3.5% down. Cool. What we can do is there's a Mojave Indian tribe that had created this type of product. They will use their name and they will share title with you. Now, they do make money off of like $200-300 a month off of your principal, interest, tax, and insurance. That monthly liability, they'll take like a fraction out. And yeah, and if you ever default, let's just say in the event of a default, you have there's no strings attached to this. You can just walk away. Yeah, it might hurt your credit profile, and you probably can't buy another house in the next 7 years, but you can walk away with this freely, and the Mojave Indians will just take this house for as it is, and they'll make money off it or exercise it in whatever way they want.
Okay. Nice. So that's DSC. ITIN.
ITIN. Yep.
Okay, so we went over all 4 loan programs that Dean has: FHA, conventional, VA, and non-QM mortgages. Okay, so once you get your pre-approval from Dean, once you guys talk about all of that, then he is going to give you your document. Okay, so this document is basically going to give us your purchase power. With that, it's going to be able to help us narrow down your search for homes, and that's when me and Eva come in.
Yep.
So
this is when you get to step 2. Get into the fun part. Shopping with me and Nicole. It's a good time. We come with coffee, snacks. We're gonna send you a list of homes based off of the criteria that you've told us: the home type, single family, duplex, triplex. Maybe you want a multi-unit. The size, location, home features. Do you want a turnkey? Do you want a fixer? Do you want school districts nearby for your kids? And how fast do you need to be in that home? So these are all things that you're going to answer that'll help us narrow down our search and help us get you into that property sooner. Once we send you that list and you tell us what homes you'd like to see, Nicole and I will schedule that at your convenience. We'll meet you at those properties, and we typically like to see more than 1 or 2 at a time. So typically like 4 to 5, more if you want to see more.
Up to 9.
It's all up to you. We've shown as much as 12 in one day before.
Yeah.
So, say we get to a home, you see one, and you're like, Nicole, this is the one. I need it. How do I get this home?
So what happens next, guys, me and Eva are going to go ahead and do our own homework. We have a lot of things to do behind the scenes. So we'll talk to the agent. We'll run comparables on the property. We'll ask the agent, what he looks like, what he's looking for in a clean offer to make sure it gets accepted, so we don't go back and forth. Try to make this easier for both ends. After we get that information, we'll work on drafting your offer. We send it out for signatures. And then once your offer is accepted, guys, that is when we enter escrow.
Yes. One more thing that we do check for that we have been doing recently because of all the fires and the insurance companies, we call the insurance companies to see, is this house covered? Like, is it insurable? Can you cover this house? Because sometimes there are homes where the sellers have taken out a claim and maybe that house is not insurable because of them not reporting back properly. So that's some more due diligence that we try to get done beforehand so we don't waste any of your time as well.
Yeah.
But going into what Nicole was saying, once we've written up the offer, send it out, gone back and forth with our negotiating with the other agent, that's when we hopefully get our offer accepted and open up escrow.
Okay, so once we open up escrow, guys, there's going to be a lot of moving parts. We're going to go ahead and send you an email with important dates. The first important date that you need to be attentive to is the EMD deadline. So the earnest money deposit, guys, this is 3% of your purchase price.
Yes.
Purchase price, okay? So this 3%, it counts, it's going to be part of your down payment. It's going to be subtracted from the down payment. So you have 3 days to turn that in. Earnest money deposit basically gives us access to the property. It shows the sellers that you're actually interested and, you're committed to this.
Yes. It's akin to a security deposit for an apartment. And just know that your money is refundable as long as we keep it within these 3 steps that we need, these 3 contingency periods that we need to stay within to be, how would I say this? To be on top of things on our side, because we need to make sure that we're doing things in a timely manner, and so is the seller, so that we can all be on track. So, do you want to talk about the inspection contingency?
Yes, guys. So once you submit your EMD, we're gonna go ahead and give you a list of vendors to contact. You can contact them. They're gonna be home inspection teams. So so the second part of this is the inspections, right? So we're going to
Send you a list of vendors. We're gonna send you a list of trusted vendors, but if you have someone that you want to work with yourself, totally fine. But the major inspections that we do recommend is the general home inspection, sewer inspection, mold, and termite and pest.
Okay, sorry, I don't know what was happening.
It's okay, girl. It's been a long week. Some of these companies do them all together. We work with a company that does the general, the sewer, and the mold all in one. Or, you can choose different people. But once we have all that done and we get the reports back, maybe the HVAC is not 100% working. Maybe there's some termite activity. 90% of the escrows that we're in have some type of termite activity, being here in California. Me and Nicole, we will go back and forth with the agent and see, hey, are we going to request for the seller to fix these problems, or do we get the credits for you so you can handle this once escrow's closed and you can handle it yourself? Because everybody's definition of fixed is different. What you think is fixed and what the seller think is fixed might not be the same thing. So
yeah, we have 2 minutes. I have a call at 5:30.
Oh, okay.
So after the inspections, guys, once that we negotiate the repairs, then what's next is the appraisal. Okay, that's when Dean is gonna send out his appraiser. They're gonna appraise the home, and well, hopefully it does come at value. It does, mostly because Dean has a good contact for an appraiser. Then after that,
we got the final loan approval, and that's just basically the bank saying, hey, you are approved for what the amount that you are asking for. Then Dean will send us this thing called a clear to close, which is basically giving us the green light that in a week this loan is going to be funded and we will be closing. That's when we get into step 5, which is the closing phase. We will be doing the final walkthrough 5 to 7 days before we close escrow. That's when we're going to make sure that all the repairs have been made, or the credits that we have agreed upon are fully put into place. All the appliances are still there. Nicole and I have both had problems with that in the past, where the sellers take something they've agreed to.
It would be a shame if she accidentally erased the board. It would be. This took a lot of work. I wouldn't do that.
Nicole knows that would trigger me.
I would not do it. Why would you do that?
And we're just going to make sure that you're still satisfied with the condition of the home, because as you see the home during that walkthrough is how you're going to get it when you get the keys. After that, you're going to sign the loan docs with the notary. That's once again with the lender. They'll be coordinating that with you. You're going to transfer the remaining amount of funds. If you're buying a house under $500,000, maybe the 3% EMD is just it and you don't have to. But if you're putting down 5%, then you'd send over the next 2% of that. Once the funds have been transferred to escrow, and escrow has said, hey, we got the funds, the bank has funded this transaction, that's when title is going to record with the county. And congratulations, you are the newest homeowner in California. Nicole, Dean, and I will pull up with the TV. We'll pop a bottle of champagne and we will celebrate. You can go look at our pages and see how we do it. We do it real big. And yeah, it's a fun time. That's the
process, guys. Wendy said great info. Wendy, I'm glad that you found this very helpful. Go ahead and send this, send the live, well, I'm actually going to get off live right now, but send my account to whoever you know who might also think this is great info.
Yes.
Okay.
Tell a kin, tell a friend, tell that heifer you hate.
Yep. All right, guys. Well,
thank you guys so much for being here with us. We appreciate you, Dean. Thank you.
Yes, thank you for the engagement, guys. We have to go. We will see you guys tomorrow.
Alrighty, see y'all tomorrow. Bye.
Take care.
All right. Okay, let me see. 714. All right.
All right. Well, another successful live.
That one was good. We had a lot of engagement.
Yeah, there was like 250 people who came on this one.
Oh, okay. Hey, Dean, you ready? Okay, give me 1 second. Okay. Let me know when you're ready.
If your mom didn't teach you how to bake. Oh, shoot.